Fraud is a crazy thing, don't you think? The range of intense criminal fraudster cases over the years is vast. Some of it more advanced and layered than you could possibly imagine. And some? Well, some is just some baseline run-of-the-mill fool's fraud, as I like to call it. And every now and then, this fool's fraud just so happens to be conducted at the second largest long-distance telecommunications company in the nation, resulting in the biggest accounting scandal in all of US history. This is the WorldCom story. WorldCom, have you heard of it? Back in its heyday, WorldCom grew to become the second largest long-distance telecommunications company in the United States, holding steady right behind AT&T. I bet you've heard of those guys. WorldCom was a massive, specifically long-distance discount telecommunications company that specialized in providing their services to resident and businesses alike. This big ol' fraud-to-be was incorporated in the year 1983, initially called Long Distance Discount Services Limited. Can you believe they changed it from such a catchy name? Let's take a real quick side dive to understand the massive growth explosion of WorldCom. But these origin stories can be a little lame sometimes, so let's make this fun. The man with the plan that brought this baby to LAN was Mr. Bernard Ebbers. He is, in fact, one of our lead characters in this tale. LDDS Ltd was birthed at a Mississippi coffee shop, as I said, in the year 1983. Ebbers got the big sexy title of CEO in 1985 and proceeded to blow this thing up in a good way. Ebbers guided Long Distance Discount Services Ltd fiercely, incurring rapid growth, further accentuated by the internet boom of the 90s. This led to an eventual merger in the year 1989 with Advantage Companies Incorporated, resulting in two big things. One, a new name. Long Distance Discount Services Limited is no more. Please welcome LDDS WorldCom. And two, they went public, baby. The merger shoved them into the public markets and they were off to the races. Across this rapid growth span, Ebbers led WorldCom to become an acquisition-hungry beast. They acquired over 60 telecommunications companies between 1985 and 1995. In 1992, they were getting into the big leagues. They outbid those grimy little scoundrels, AT&T and Sprint Corporation, in acquiring Advanced Telecommunications Corporation for $720 million. And don't you dare get Advanced Telecommunications Corporation confused with Advantage Companies Incorporated. As you can see, the telecommunications sector is one of the most creative brand naming industries in the world. Smash cut to 1997. We're in the early days of the dot-com bubble, folks. Money is oozing into the stock market. Capital is easy peasy to come by. We know this. So on November 4th, 1997, WorldCom announced a big old merger with MCI Communications for a small close of 37 billion doll hairs. At the time, fun fact, this was the largest corporate merger in United States history. And this also resulted in yet another name change for WorldCom. Now introducing MCI WorldCom. Woo! The unstoppable beast. Except they weren't unstoppable. Not at all. On paper at this point, WorldCom was murdering. Numbers murdering, in a good way. They weren't actually taking any lives that we know of. We're talking year after year after year, non-stop, incredible growth. This was an incredibly profitable, money-printing giant. So much so that mass amounts of pension funds and retiree accounts were loaded up on shares of WorldCom. I mean, come on, it was a no-brainer. Except, you guessed it. It was, in fact, a brainer. Let's take a second to introduce the rest of our characters in this story. First up, meet Scott Sullivan. Mr. Scott Sullivan was WorldCom's chief financial officer, secretary, board member, and treasurer. With that, Scott Sullivan was something of a celeb in the accounting world. This dude was a socially sexy accountant if ever there were one. Next up, meet Cynthia Cooper. Miss Cynthia Cooper was WorldCom's internal auditor in the early 2000s. With that, Cynthia Cooper is, as of 2021, often titled the WorldCom whistleblower. Folks, if you will, immerse yourself. The year is 2002. George W. Bush is the president. We are in the stock market, dealing with the repercussions of, well, many things, but most notably, the popping of the dot-com bubble. With that, the anger, confusion, and general distrust of another little company from a few months prior is just now starting to subside. You may have heard of them. This is Enron. The Enron storm was still fresh in the air, but Congress is telling us that legislation is coming, so the pain is starting to ease. But don't get too comfortable, fool. Let's jump right to the beginning. It's early 2002. At the request of a colleague, our hero in this story, Cynthia Cooper, is beginning a little investigation. Nothing crazy, she just wants to look into some unusual accounting entries she found over in WorldCom's wireless division. So with this newfound discovery, she approaches a partner at WorldCom's auditing firm. This is Arthur Anderson, the infamous accounting firm known for auditing Enron and WorldCom. Well, of course, our man from Arthur Anderson keeps it cool, calm, and collective. He assures Cynthia that any of these so-called aggressive accounting entries are all balanced out on a corporation-wide basis. It's fine. Well, all is good then. Problem solved, right? Wrong. Smash cut to the next day. Cynthia heads out early for a hair appointment, a much-needed break from the madness for once. But upon her visit, while she sits, she gets an unexpected phone call. The call states that none other than the famous Scott Sullivan wants to chat with her pronto. What? Sullivan himself? Well, of course, Cynthia calls him up. At this point, Scott lets loose on her for snooping around the wireless accounting treatments. He says she's no longer to discuss this matter with Anderson auditors. Stay away from them, Cynthia. Scotty tells her to channel all future queries through his own deputy from here on out. In Cynthia Cooper's own words, no one wants to believe their boss is perpetrating a fraud. You want to believe there's a valid explanation. Well, folks, Cynthia couldn't just stop. She knew in the old heart of hearts that something was off in all this. Only, she didn't know the scale of it. To understand exactly what went down in the WorldCom bomb, we're gonna go over a quick and slick example with Chris. And you better believe I just coined WorldCom bomb. That's gold, baby. This whole ordeal comes down to how the great Mr. Scott Sullivan treated capital expenditures and expenses. With that, you gotta understand the accrual accounting method. Of course, this states that said expenses will be allocated over the entire period it will benefit the company. This attempt is done in order to properly match revenues with cost. Example time. Let's assume Chris's Body Butter LLC earns a total of $10,000 profit in a calendar year. And this sexy business purchases a $7,500 oil concentration machine in order to create the product at scale. This machine is expected to last for 5 years and allow my body butter employee army to make twice as much body butter per hour. If an investor examined our financial statements, they would likely be underwhelmed when they see that my thriving business only made $2,500 in profit for that year. That wouldn't appear to be very thriving at all. So since the body butter oil concentration machine is expected to last for 5 years, we can take its cost and divide it by 5. Resulting in $1,500 per year instead of realizing that ugly large expense in 1 year. Chris's Body Butter LLC can expense $1,500 each year for the next 5 years, reporting annual earnings of $8,500 for this given year instead. This allows the investing folk to get a more accurate picture of our economic reality. Well, now for the crux of the tale. Cynthia Cooper kept finding more. Over those next few weeks, Cooper, along with fellow auditors soon after, came to find out that WorldCom's wonder boy, Scott Sullivan, he'd been manipulating the financials consistently. The cash flow statements, expenses, profits, oh my. Scotty was mislabeling portions of operating cash as investing and vice versa. And of course, Scott was taking advantage of the old accrual accounting method. false labeling, line costs, and huge fees associated with its third-party network services and facilities, jotting them down as capital expenditures. In short, the book of accounts showed the public markets that WorldCom was continuing rapid growth right through 2001, quarter by quarter, that it was a thriver, swimming in profits up the wazoo. But the only thing WorldCom was swimming in up the wazoo was lies. Boom. On June 25th, 2002, the WorldCom team announced that they had to officially revise their financial statement after a bit of funny business had been found. How much of a revision, you may ask? $3.85 billion. Their statement suggested they had a profit of $3.85 billion when in fact that actual amount was a loss of $500 million. Imagine that. But wait, there's more. In due time, as the massive, trust-shattering truth spread across the investment world, the investigation revealed that WorldCom had actually fabricated $11 billion in total profit. Yeah. The operating margin of WorldCom as a company indicated that profits had been dropping steady since the year 1998. And that then was the start of the need for accounting manipulations. Just enough to improve the old margins on paper, which would impress the markets, showcasing their stable, appealing company that only goes up. But folks, fraud is a slippery slope. Well, WorldCom kept slipping. And eventually they needed more than subtle changes, which of course is what set forth Scotty's underreported expenses. He figured in 2002 underreporting those pesky line costs would show fat profits and pump up that stock price, which would give them the capital to get things back on track. You know, take some restructuring expense hits and win in the long run. But, well, WorldCom did not win in the long run. WorldCom officially declared bankruptcy on July 21st, 2002. Almost immediately, they had to fire over 17,000 employees to sustain the industry. WorldCom's stock price rocketed up to $64 a share before the truth crashed upon the market, which of course, when it did, plummeted that share price down to a close of 10 cents a share on July 2nd, 2002. The great corporate whistleblower, our hero this week, Cynthia Cooper, went on to gain some love in publications after all the waves crashed down on WorldCom. But the world ain't so black and white, you know? After the disclosure of everything, with the investigators, press and lawyers following her every move, Cooper became, and remained, seized with depression and anxiety. She came to understand that her life was never going to be the same. The accounting wonder boy, former CFO, the infamous Scott Sullivan, was arrested and sentenced to 5 years in prison after pleading guilty to securities fraud. But 5 years, you say? Not to minimize it, but ain't it usually a bit more? Well, Mr. Scott Sullivan teamed up with the government and testified against former WorldCom CEO Bernard Ebbers. Mr. Bernard Ebbers, the former larger-than-life cowboy boot-wearing CEO, was found guilty of 9 counts of securities fraud and sentenced to 25 years in prison in 2005. In December of 2019, he was granted early release for health reasons. Then, in February of 2020, Ebbers died at his home in Mississippi. That got depressing. Anyway, this sexy little scandal eventually led to big-time legislation. This was one of the biggest American business scandals of all time at this point, right up there with family favorite Enron. As a response, the government enacted the Sarbanes-Oxley Act, SOX, to increase investor confidence in the old financial markets. Before this, there were a whole lot of loopholes public companies could take to mislead and defraud investors, but no more, in theory. Here's some of the biggest changes that came with the SOX if you're interested. WorldCom in 2006 was officially purchased and acquired by Verizon Communications. That's where all the assets of the former telecommunications giant sits to this day. A story of lies, money, fraud, and downfall. WorldCom was, at this point in time, the biggest accounting scandal in American history. TLDR. When intense company growth turns towards the down, fudging numbers to please investors will end in heartbreak. And that right there is my take on the WorldCom story. If you liked what you saw here, please head the heck on over and check out some of my other money lore videos. I delve deep in immersive ways on all juicy tales from business, stocks, crypto, frauds, etc., etc. I got a whole playlist full of the good stuff for you, so if you're interested, go check it out. Subscribe if you're feeling wild, and hit that like button if you feel like showing unnecessary emotional support. And with that, thank you so much for watching this video. I will see you real soon. Be safe out there.